my first guest, Tanya Hart Little. Tanya's the founder and CEO of Hart Advisors Group and Hart Capital Partners. Her team's completed in excess of $5 billion in commercial loan transactions since inception. And earlier in her career, Tanya co-launched the Royal Bank of Canada's CMBS capital markets platform and as COO of that platform. She was instrumental in deploying over $2.3 billion in loans in just the first year. And she also spent time as managing director for GE Real Estate's North American lending division. So long track record and without a doubt an expert in the field. And she has an extensive list of personal and professional accomplishments and recognitions. And we're happy to have her on to discuss one particular area of expertise, which is modifying securitized debt and CMBS market in general. So Tanya, we appreciate your time and insight. Take it away.
Thank you so much, Robert. And thank you so much for your time and for including me today. So Robert was kind enough. You can hear me okay, Robert? Just to make sure.
Loud and clear.
Okay, yep. Perfect. Okay, so he was kind enough. I had asked him to provide me with some of his questions that he hears most often from borrowers and hotel owners. And so I'm going to, kind of quickly go from topic to topic. And if you'll just advance the slide one, then you'll see the topics we're going to be talking about today and one of my better pictures. Anyway, I want to talk about some things. I spent some time right before this call, not only reviewing what he asked me to speak about, but speaking yesterday to various special servicers to try to give you kind of that round two, kind of what's next. And with that said, I want to just talk about a few topics you might have heard, might not have heard, but I'm going to start out by just talking about pooling and servicing agreements. So for those of you that don't know what a pooling and servicing agreement is, it's really important to your CMBS loan. It's basically the agreement that's created when the loans are pooled together, and that can be from multiple originators, and they're packaged to create these mortgage-backed securities or CMBS. That security is then sold to investors. And this agreement basically governs the roles of the different parties, the master servicer, the special servicer, the trustee, multiple parties, and then also the rights of the investors. And as I answer your questions, I'm going to refer to this a lot because, CMBS is complicated in ways that you weren't aware of at the time that you originated your loan, nor did you even know you were really a party in a way to these pooling and servicing agreements. You're not directly, but you are indirectly on what they can do for you. And I think, one of the things we here and my associates here at Hart Advisors do best is really setting expectations and understanding each person's loan and what can or can't really be done. It's not a broad brush. So with that, I'm going to ask a couple of things. One of the things that Robert asked me is common resolutions that are granted and whether or not it's being done with the master or the special or both. We have had some early wins, and I'll show you those at the end of the presentation that have been done. And most of the covenants or consents right now that are being processed, they're getting processed by the special servicer as what we call a referred matter. So you might go through a Midland or a Wells or something to kind of make your request. But then it's really kind of going over to some people over on your special servicing side, and some of you might see that as what we call a referred matter. And that's good for a borrower in that referred matter is not considered what is a specially serviced loan, which is different. And we'll talk about that. But that allows them to really not start the clock on a bunch of fees and concerns that you have about quote unquote being in special servicing. Master servicers are generally handling general matters like late fee waivers, rebalancing of reserves, initial payment defaults. And that's because these pooling and servicing agreements only allow them to handle certain things. They really are hand-tied on if you want a deeper type of modification. some of the noticeable differences between, each of the servicers, they do have a little bit of their own niches and nuances that are happening. Um, if you're receiving sometimes a positive or a negative response, it might not necessarily be in the negative case that, hey, we don't really want to do your deal or we don't want to give you relief. It might be because they can't. And unfortunately, a lot of people, because of the volume, these asset managers may just say, sorry, we can't do that. And what you need to understand, and what some groups that work with CMBS loans can help you understand, is really why they can't do certain things. And that's a lot better than just hearing, no, I can't help you in your time of need. Most servicers have been accommodating some of these requests within reason. If they are reasonable requests, if they're well thought out and presented, we have received yeses from the major players, Rialto, L&R, Midland. And it's not just on one type of request, and I'll show you that in the end on some of the things that we asked for were multiple. Rialto's been a little picky on items, and by that I mean they're wanting some recourse on reserves, and there's been some cash management provisions. At the end of the day, it's a balancing act, because I do believe some of those things they can and will let go of with the right type of balance on what you're asking for in that negotiation. It's not just, hey, I need relief. It's really a structure. And, with that, I would also say persistence pays off. We have associates here that are calling daily on reserve requests or tax and insurance rebalances or waiving late fees. And a lot of things are getting lost. There are people that need their capital reserve reimbursements back to them, and they're not seeing them for months. And those are important to you, especially when you're not even sure how the next mortgage payment is going to be made. So it's important that, there's a way to handle those and there's a way to get their attention. But sometimes a streamlined approach or going through special to get to the master can work for some of us that know people on those sides and can get something done a little bit faster. I was asked about the likelihood of government intervention. I've talked to some lobbyists that I think are taking careful and considerate approaches. One of them that I've talked to several times has met with the president and his counsel about CMBS relief specifically for borrowers. And, I think that there are big groups, big hotel groups that are behind that and that are working on those. And I do think that they're going to continue their efforts, and we're continuing to follow their efforts. But CMBS being not a government type of debt vehicle and the complexities of it, I'm not going to give a lot of hope to there being an intervention. And I'm just being honest with what my thought is. How are decisions made with the CCRs? Let me talk about that for a minute. CCR is what we call controlling class representative. So you might have hundreds or thousands of bondholders or investors that are in these pools. And so there's usually one representative, they call it a CCR or controlling class representative. And they are really the decision makers because they usually hold some kind of stake in the losses of the bonds. So it's complex in that you might be talking to an asset manager at a special servicer, and then they report up to a committee. And that committee can make certain recommendations, but ultimately there might then be the CCR above that has kind of the final word on whether relief is given and how much relief. And this comes to play a lot when we get into special servicing. So I think what I want everyone to understand is there's multiple tranches of people and decision makers, and that asset manager has a box that he can offer to you. And if anything else can be offered, a lot of times that just takes negotiation skill and just understanding which options are truly options. So that's kind of a quick down and dirty on that. Do they address individual loans when giving special direction? Yeah, absolutely. I mean, each of these are limited liability entities, and they are looked at very specifically on a case by case basis. So these special purpose entities are individual. Not one loan is the same. And that doesn't mean if you know a hotel owner that got one response that you're going to get the same response, or you may get a better response. And again, a lot of times that goes back to the pooling and servicing agreements. We want to talk a little bit about triggers for recourse. One thing that I've realized with hotel owners specifically, as we've worked with them really a lot over the past 3 to 5 years, is that much of your debt is with banks and is recourse. So I have a client right now that has 20 hotel loans that is recourse and 3 that are CMBS, and he has a hard time balancing the difference between those, what kind of relief he can get, and why recourse he should really care about it when it comes to CMBS. And I think at the end of the day, you have to look at that the defaults associated with recourse on a CMBS loan can trigger things immediate. So it's not just saying, hey, I have a recourse loan and I know it's recourse. If these certain things happen, why should I care? It's really that those triggers can cause an immediate action that is detrimental to you and your property. So understanding, a lot of people trip recourse triggers and don't even really realize they've done it. So that's important to understand if you're looking for some sort of help on CMBS loans. Let's see. Let's talk a little bit about the government stimulus and kind of what we've had. Basically, right now, there have been almost everyone has a trigger for debt coverage ratio. There's just no way not to. I think a lot of people are asking about, hey, is it going to be enforced? Listen, the lenders and the CMBS lenders want to keep that option, obviously, but there's probably not a person out there that really hasn't triggered it at this point. We're not seeing, a harsh enforcement like we would have seen before. And in fact, even when I have triggers, I have a couple of hotels where we've actually triggered kind of a cash management situation, and then we turned around and got it waived. So there's serious covenants for you that are out there, and I understand it. But again, managing that balance and managing kind of how you've managed your hotel, how you're managing this time is really important to get those waivers ultimately. So I think that's important. The PPPs are kind of a given, mainly because they are a forgivable and not a collateralized, if you will, by the property. The reason you're receiving so many no's on the EIDLs is exactly that. It's an additional lien on the asset. I think that's pretty much across the board that we've seen that those aren't being approved. So that's really why. Let's talk a little bit about next round 2 modifications. I kind of put this into the first 90 days has happened. We're really going into what we call secondary modifications, or phase 2, if you ask me. And we are starting to see, and the servicers are very well aware that, not everything is going to be, rosy as we move forward. And they're expecting that. So a lot of these, I know what we've done with some of our clients is we might have gone for a short-term modification, but we're kind of waiting to kind of see what the performance has been for a couple of months to see just how deep we need to make those requests. We have made some of those requests, and we are getting some positive feedback. on kind of what they will consider going forward. But quite frankly, I spoke to Midland, L&R, and Rialto yesterday, and none of the asset managers that I'd spoke to have actually seen, it go so far as to getting approvals on kind of deeper modifications yet. And it's just because they're still processing and papering forbearance requests, if you will. So it's to come. It's to start now. It will start now and go into the fall. And I don't really think everyone has been scared to go into special servicing, and rightfully so. There's some concerns about going into special servicing and costs associated with that are true concerns of any hospitality owner, any retail owner. We have the same thing. But I also think that there's going to, because the pooling servicing agreements for the second round of CMBS versus the pre-2008-9 CMBS is different. I do think there'll be more workouts. I do think that there will be waivers of a lot of this default interest and late fees, although some of it, won't happen. But in order to get, some of the deeper modifications, it just cannot be handled any other way, period, the end. So we're trying right now to push everything through as a transferred matter, not only for just 3-month relief, but multiple other types of relief as well, to try to save our clients money. But ultimately, there will have to be a conversation, depending on the asset and depending on the need, to move to special servicing if that's appropriate. So I think I've answered that. And I'm just going to touch on, hiring a consultant, an attorney, pros and cons. And then I think I'll wrap up with this because I want the other guests to have plenty of time to visit. What I tell my clients a lot is CMBS is great until you have an issue. And it's great debt. It's non-recourse. It's long-term, but you still have equity in your assets to protect. And most hospitality groups and owners, this is very personal. There are a lot of, when you look at hiring a consultant or attorney, there are a lot of people in this space that in the last 60, 90 days have jumped into this space as a placeholder for them, as an income maker. They may or may not have the appropriate experience to actually understand what can and can't be done. So that's just something you should look at. How you work with servicers is important. We would rather collaborate for win-win solutions than litigation. I believe litigation, unfortunately, always costs the borrower more. And if you're hiring an attorney, they're very well qualified, don't get me wrong, but the attorney on the special servicer side has to be involved. So that means you're paying your attorney to talk to their attorney. So you're paying 2 attorneys, and then that message has to go down to the asset manager. So a lot of times people choose consultants over attorneys to handle the business points, and then ultimately turn it back to their attorneys to handle the paperwork and documentation. PSAs are important. We are looking at them on every individual deal to understand what can be done for our clients. There's really no need to tell someone or sell something that says, hey, I can get this done if the PSA won't allow it. So I think, that's an important thing when picking someone to look at what's going on. And relationships with the servicers, we've had them for the past 10 years. I'm going to tell you, a lot of people have left the servicing world. There's a lot of new people that have come in, but I think how someone's handled themselves over the last 10 years with the servicers and their requests and how they're working with the servicers goes a long way. And then communication and setting expectations. I think overall we're number 1 in this area. We probably give out more advice, free advice, before we will engage someone, but we want people to understand this process, understand it's not easy, but understand that working with, I know my team is going to be better than going it alone. So I hope that is quick and it answered a lot of questions. I think I'm 2 minutes over, Robert, but
That's fine. It's perfect. And one thing I might add to what you're just saying related to a consultant, before we were going to feature any consultant in our webinar, we put in a few calls to contacted servicers just to try to understand the relationship and the dynamic, really just to make sure they didn't perceive it as being adversarial when a consultant comes in. And our feedback, whatever it's worth from the servicers, was that the consultant really helps streamline things and makes the process more efficient for the servicer, and to the point that they view it as a positive, just take the conversation to the next level immediately. So
yeah, and it helps, especially just set the expectations for clients overall. But if you want to flip quickly to the next slide here, and we can come back to this in the end. These are 3 COVID reliefs that we've done, and you can see that multiple items had to be done for each property. And so the first 2 are COVID. The second one was actually a little bit deeper in special servicing. But you can see there, we believe that, at the end of the day, waivers of default interest will happen. Sometimes they're big waivers of default interest. And I think, it's good for everyone. Not to say that there wasn't a lot of give on that deal, but I really don't want people to be totally scared of special servicing, because I do think more will get worked out in this cycle than not. So with that said, I'm going to turn it over and look forward to it.
Great information. And the contact information for your marketing team was up, and on our last slide, we'll have full contact information, just so if somebody wants to reach out,
Sure.
they can contact you. And if somebody were to contact you, I think there's just a lot of just questions about how the process works, but do you all just get some information basically in some sort of consultation at first to try to figure out?
Absolutely. Sometimes we have multiple consultations, but that's fine. We want you to be prepared before you engage us. We want you to understand what you're getting into and understand what we can do for you.
Okay. Thank you very much for the time and the insights. Great information and evolving every day. So thank you.